So good morning, everybody. We'll get started. I thought I'd begin by looking at like a very higher time frame, um, higher time frame potential of the direction in which things could go, and if indeed we are going to start seeking like lower prices, and we're going to start moving down. This is a weekly. I have been going back into this piece of price on the weekly and the daily, just as a comparison. And the one thing that I look at is something like this. So we have for those of you that maybe don't use the standard deviations or are learning them right now, one of the things that I've been sort of showing recently is that, like, if you the Thomas talks about a standard deviation not being valid till it hits -1, right? And we draw our standard deviations from swing highs to swing lows and their manipulations of the previous high. So the previous high can just be the most recent high. So if you take like a swing high from here, you look at this piece of price action here and you see that there's a swing high, and then price goes through it and then comes back and closes back down below its swing low. So swing high, swing low, 1, 2, 3 candle, 1, 2, 3. So swing high, swing low. This same thing here, 1, 2, 3, and then this 1, 2, 3, 1, 2, 3 here. So swing low as well, and then swing low. So it's taking the high and the low after a swing. And if you try to do that with any other high that was taken, so that was, say that was a swing high, and then you try to do your standard deviation from the high and the low, you see that like -1 was not hit, right? It was hit over here, but it wasn't hit before it was taken back again, right? So then I look at this high, and then where's the next previous swing low? Right there. Okay. So this one did get hit here. 1, 2, 3. So this one did get hit here, but then you have this massive move and it breaks that. Okay. So this one actually I didn't really see before, but like this one you could have been like, oh, okay. But what is also really important of the manipulation too is this move here, like expansion and then a expansion below too. So and then if you were to try to take something like this swing low, you see the -1 is over here. It didn't get hit at all. So the fact that you get like this right there, the one that's already drawn. So the fact that you get like this really strong manipulation above and then below, manipulation above and then the move below, and then it finally, and now on the daily, it's not going to be very clean, right? Because of all the gaps, and on the smaller time frame, that's why the 5-minute standard deviations look a lot nicer. But anyways, the point is here is that as we're starting to move lower and we have a standard deviation, you can see that on this one here. So this is back before the tariff news. And if you were to draw this standard deviation, so you have this manipulation of this high. It's a pretty decent push above, maybe not below, but there is displacement eventually. You get price that goes down to 1 and it stalls, retraces higher, and it actually retraces to 0.5. then it continues to go lower and it moves all the way down between the 2.5, a little bit lower, comes up, retraces to the 1.5, and then it starts to march lower and eventually gets underneath the 2.5 with this move, and then a slight retracement, but then you see it blast through the 4 and then gets to 6, and then at the 6 is where it stops. So on a daily, you could be using this sort of guide, and then for what we have going on right now, I look at this as the standard deviation that's played out. Now let's just take, for example, if we were to take, might be a little bit tougher to do. Yeah, it's tough for me to do because there's too many lows to guess. But I was going to take a range, but this is what I'll do in ranges. So regardless of a higher time frame or smaller time frame, if I have a range that's plotted, this major swing low to the all-time high, and if I were to actually look at where price would want to go to, I would say it would want to go to like 0.62 to 0.79, like in between those areas is where price could retrace to. And then that lines up with like the -6. So if we were to get all-time highs and we had this pullback, we would be looking at a pullback between, so there's your 20% here. So 20% puts you at the -4, right? So when we get like a green line, I'll go through this smaller green lines like in here as we kind of go down. But if we talk about like pullbacks, we talked about a pullback to here, and then you're looking for like average pullbacks are like 5% to 10%. That's good. When you get like a 20% retracement or pullback or sell-off, that typically signals that recession. People talk about, oh, it's 20%, we're in a recession. 20% is like, it happens every so often, right? And then you might look for something even bigger, because as we go through time, the percentages are still the same, 20 to 35%. It's just less numbers because of a smaller movement and the like lower volatility. And as we get higher, volatility seems to be increasing, and then so the point spread is way bigger, but the percentages still sort of remain the same. So a 20% retracement to 30% puts us in that zone around here to take out all this liquidity that's just been building, right? The same thing happened through here. All of this was like a move. Let's see, it's 2024. So you had all this liquidity. It just doesn't look as extreme because we're comparing it to this, right? So anyways, higher time frame, if we start to go down, then we're starting to look at all of these areas that I have marked off, these are just like PD arrays on the weekly, looking at like weekly fair value gaps. This one's been untapped, so that in relative equal low. So if price started to move really quickly, we don't want to see like a fast dump, like just like a crash. We want to see, okay, let's get a really healthy pullback to go to the downside. So that would be something that would be really great, because we can trade that, right? We can trade that without volatility and without getting without getting wrecked, right? So so that's kind of what I'm looking at, to the downside, to continue down. And it would be really nice if it was just a nice slow grind down, because as we get these fast moves down, we get the fast recoveries, and that's what sparks something like this, where it's like, oh, okay, now we got to take all that out. Or price might be looking to take all that out. So anyways, that was just a kind of like a higher time frame kind of outlook. But I thought what we do next is go through the week. Before I actually start kind of going through it, let's just see like questions. If anybody has any questions right now and they want to go through something specific through the week, let's just do it. Let's do it that way. because I'd rather talk about something specific that maybe you're dealing with, or a trade that you went through. Um, something specific that you might want to might want me to go through first. And if nobody has anything, that's okay too. It's not a big deal. I'll just continue on, even if they're just like a basic topic that you guys want to talk about. Oh, morning. No, sorry to hear that. Yep. Okay, Thursday. Just right there. Yep, right here. Mm-hmm. Yep. Okay. Thursday morning. Let's go 9. Let's go pre. So 9:30. So this is kind of. No, not the on Tradeabate. Excuse me, on Tradeabate. Is that what you mean? Oh, okay. Yeah, I thought maybe if it was just your normal paper trading account through Trading View. Oh. Right. Yeah. So you weren't able to get it. So once the eval is, so you're saying that you were on an eval. Yeah. Yeah. If the eval, I think if the eval gets, if you lose an eval, then all the trades get lost. Right. Is that kind of what you're saying? Yeah. So, yeah. Thursday. Just take a quick peek here. I just want to look at the news calendar. Okay. Oh, you went, okay. Right. Okay. So hard to determine. I don't want to say like in hindsight, I think very, very difficult to obviously start chatting about hindsight, whether or not you should go long or short, right? And here, I think this was the Asia Standard Deviation we were watching, and I think through London, excuse me, I can't remember if we were watching anything from the to the higher time frame, because the only thing I really see is between here and here would be something like this to go to the upside. Now, I don't remember even like looking to go long, just based on sort of the narrative and higher in the range. So, one of the things that we were watching pre, and I wanted to take these because I think I specifically remember saying, I like the stair stepping on the 5 minute. I remember saying that because I ended up taking a short from this 5 minute fair value gap. And then I kind of chickened out because what happened is it came up and hit it once, and then it came up and I had already kind of taken some profit, and then I just kind of closed it. So, so to get to your question is like, when you want to go long in this situation, it's like this, you're looking at this. This should be the range that you're eyeballing from here to here. Okay, so when you have this piece of price action, right? Because yes, okay, we sweep pre-market, we sweep a lot of this liquidity. So we're like, okay, downside liquidity met. Okay, here we go. Break above. This is telling me that price on the 5 minute wants to go higher, right? But we are waiting for, now this would be the ultimate let's try to explain this in a way that I don't want to, like, this range is so high, you have to basically have a bias before you even get into the trade, or before you even start thinking. It's like, yes, we're watching candles close, and the most recent piece of price action is telling me short. And the only thing that's going to tell me that we're going to go long, if I'm just looking at this very short amount of price range, is I need to see a 5 minute candle close above here. Okay, so that's my this is my 5 minute stair step. Let's even break it down a little bit more and go like this. Last up close candle, right? And then you can just keep on doing that. Last up close candle. And then you can even go up to here and just say, we'll include the upper wick. Last up close candle. So you've got 3 steps here, right? So you would need to see a 5 minute candle close above here, at least maybe the high. Because if you were being conservative, we use the wick, right? If we want a guaranteed, hey, I want to see a close above the last piece of price action that is telling me that we're going to reverse. So let's just do like this. So this would be my ultimate. This would be my okay, I'm waiting through the open to see if price is going to start closing above here, right? Okay. And so what else do we have to kind of guide us? We're going to have, for me lately, it's been sort of the 9:30 opening price. Okay. So let's just continue on here. So here you have the open at 9:30. And so what I've been doing is I want to start marking these out. Okay. And this is 9:30. Okay. So if do you use orb at all? Do you have the orb on your chart? Okay. So I have it on here. So it'll start printing it out. Okay. So we start watching price. And if you have 5 minute candle closes or 5 minute candles that look like this, it's like, okay, this is a large wick that took out a low. So we swept a low, but we didn't close below any of this. So I'm like, okay, it's taking liquidity. Maybe it wants to go back up. It did go back up and it went into a PD array. So hindsight, looking at this, you took out a low and you are seeking an imbalance. And now if price wants to go bullish, we need to start taking out swing highs. Okay. So we need to take out, so I'm not sure. Gary, can you hear me, Gary? Gary, you're on, you got a hot mic, Gary. So if we wanted to start seeing, so that's a swing high. It took it out, but it's not closing above it. Okay. So we want to start seeing, close above here. So I took a short here and then I think it came back up, tapped it one more time. So now you're telling me that you started to think about going long above London high, right? And if you were doing it within this piece of price action, you're doing it like before 9:45, right? Is that correct? Did you say London high? Yeah. Right. Gary, can you hear me, Gary? Hold on a second. Sorry. Everyone, if you just want to go into the settings, if there's someone that's got a hot mic, you just hit the three dots and then you just mute that person. I don't have the power to actually mute them completely. So if you're listening, just go into Gary's profile, click on the three dots and just hit mute. And then if he's got a hot mic and he can't hear me, then it'll mute everybody up, mute him. He will be muted for you guys. Okay, sorry. Okay, so yeah, so what you're doing is you're trying to make decisions prior to a candle close on a 5 minute, and I know that you watch the 1 minute too, right? Yeah. So when we have like this 9:30 opening, and you see this 9:34, 9:35, and it's just like there's no fair value gaps being made, right? There's nothing. So one of the things I would say is start waiting for fair value gaps to be made on the 1 minute before making any kind of decision. And so you see this fair value gap to the downside after rejecting a 5 minute fair value gap multiple times and not closing above this line that we have marked out, right? So this line is the 5 minute, right? If we can't start, so like again, this is like, so I'm telling you wait for fair value gaps, but I'm saying, oh well, I shorted this, right? So I'm kind of doing the opposite of what I'm telling you, but again, if we're looking at this range, then you want to be long below it. You want to try to take your shots lower in this range to go higher. And you can answer this if you want, because I'm guilty of it too. Is that I don't sometimes have my set bias ahead of time, and then therefore I start getting caught in, oh, maybe I will take a long off the orb, mid orb. Oh, it's rejecting off the high. Maybe I will take a short. So you have this back and forth in your mind prior to waiting for price to do its thing, and you're just trying to catch anything, and you're trying to catch a long or you're trying to catch a short, and you're going back and forth, and that is where you will get chopped up, right? It's like, okay, set my bias. I am short. If I'm short, then I need to do a few things. I need to take a short from higher in the range. I need to take a short from, orb high, or I need to take a short after it gets under mid orb, or I need to take a short from, a swing high that's rejected, an order block. So I have to have something where I can take that short higher in the range. Now, we eventually get into this and we see this displacement lower, and this could be potentially a reason for you to short. Is this 1 minute fair value gap created and then another one, so it's created after this, and then price doesn't come back and test this mid orb, and that could be the place where you're like, as you see price start to fall, you maybe take a shot at a short, thinking, okay, I'm going to short, as it's running through midnight, and I'm going to give myself, a 4 a.m. or a mid orb stop. And I don't know what's going to happen. I don't know if it retraces back up, and it doesn't, right? So it continues lower. So set your bias, wait for these disgusting wicks to stop printing, and wait for wicks like this to start printing. You get 2 candles that look like this after this mess, then it's like, okay, that looks a lot cleaner to me. If I go to the 2 minute, same sort of thing. If you're just strictly watching the 2 minute candles printing, you can start telling yourself this narrative. Okay. You can start saying, let's get rid of these as OBs. And let's just start saying, okay, pre-market price has to close above here. It goes and it closes below. Okay, bearish, right? So that's what I'm telling myself. Okay, new high is created. Close above. No, it's not closing above, but it is closing below. So we're still bearish. And as we start to get lower and lower in this price, in my mind, I start thinking, oh, I'm gonna miss my shot. Right? The lower and lower it goes. I don't want to be shorting too low. But during the open, if we're gonna trend somewhere, we're gonna trend. And I think overall we were just bearish in the market over the last week, regardless. So that doesn't mean we don't retrace to previous day high, but we're seeing this story being told even on the 2 minute. No closes above here, and then you get this this stuff happening, which you're going to wait for, and then you just have to start doing the same thing as price starts to clean up after, like post open, and you've got these wicks, and you're like, okay, well now I have to like get a close above all these wicks, right? So that might be the way that you narrate the story to the upside and tell yourself, okay, I'm not going to long until I get a close above here. Now, here's where I have been finding the 930 really helpful, is that if you mark out the 930 and then you're just using it as a little bit of extra compliments, and you're saying to yourself, okay, we have the open, we're trading above 930. What I want to see combined with us trading above 930 is I want to start seeing closes above these candles. So let's go to the 3 minute. So on the 3 minute, we have the same sort of thing where we don't have a clear close above here or here. So no closes above here. And then we're waiting for price to kind of do its thing. You get this rejection twice of the 3 minute. And then you have this move that takes out all of this liquidity, but closes below this candle. So for me, I don't want to watch the 1 minute. I'll watch the 3 minute and 5 minute. And I love this. This is the signature for continuation for me. We get a close below this low and this low. And then we get a retracement into these 2 lows that got swept, right? And so that would also be a trade, but that's a hard trade to catch for sure. But you have conviction from this 930. It's starting to trade below 930. It's what time is it here? It's 9:42. And then this is the 9:42. So the orb is created. You get this push up where here you're kind of thinking, because we talk a lot about maybe it'll start to stall and turn, because often we turn at the orb low or high. But after all of this has been happening, and then we did sweep London low, and a lot of people might be thinking, oh, we're going to sweep London low, and we're going to retrace potentially. But no, you get a close below London low, and then you get the break and retest. So that would be another thing that I'm looking more so on the 3 minute. And then what happens here, you get this fair value gap that's created. You might be thinking, I want to wait for this orb high or orb low to get tapped. Well, you've got a fair value gap that was created. So I can't remember if price just completely dies here, but let's see if we did that to the say give yourself about 40 points, that gives you midnight. If you're not going to wait for a break and retest, and you just wanted to go, well, this is the retest into the fair value gap. I can't remember. So price then continues lower, right? So you have this during the open, volatility is pushed into the market, and you have this trending lower. And then right here, I think we did have this marked out, and we talk about this a lot as well. We talk about, hey, wow, this manipulation was created and it looks like it's so far away, right? And I don't know if I'm going to trust it. However, it's been usually working out. So if we go to the 5 minute, so that same one is created. So you get this move down to the 1.5, and you usually get a little bit of a retracement at the 1.5. And then I can't remember if we retrace much further up. We don't. We get stalling at 1.5, reaccumulation, and this is good because if you miss this fair value gap on the 3 minute, you just have confirmation of an order block, being created where you get a close below this up close candle, close below it, and now you're waiting and you're saying, okay, I'm going to take 50% of this order block. So this could be my continuation play as well. So you mark out there to there. You don't get 50%, but you get a tap up here, but you get multiple taps on that Asia low. So maybe you're taking your short from within this piece of resistance, telling yourself, okay, I don't think it's going to break above that, and I'm going to follow the standard deviation to the downside. And you get this move, close below the 2, retracement to go lower, or close below the 2.5, retracement in between 2.5 for further continuation. So yes, hindsight, very easy to sort of like pick it apart like you were saying. However, that is how we have to sort of start navigating. And I think that that's where, when you watch the 1 minute, that's where you get, that's where you can get hurt, because I used to watch 1 minute and I used to get murdered on 1 minute. So I had to start saying, if I miss a 1 minute trade, big deal. If I have it on the side and I'm kind of navigating it and watching it, I'm not going to I'm not making my decisions based off of 1 minute. I will monitor the 1 minute when I'm in a trade to help me maybe navigate PD arrays being broken on the 1 minute. And if I see that like 3 or 4 PD arrays to the opposite side are starting to get, disrespected, but it very well would be the same thing as like just going down to 3 or 5 minute and just watching for 1 or 2 PD arrays to get. Because if you were in a short from here and I saw price starting to close above here, then I'd say, I should be partialing, right? I should be partialing if price is starting to close above 50% of these, this order block. So very important to wait for candle closes. Very important maybe to hop off the 1 minute during the open when it's really volatile, and maybe start trying to find, signatures like this. Okay, this, a close back above 930 and a close above the 5 minute fair value gap. Now, here's another really interesting thing, is that if you look at this massive range here, this is the range that we're trading in, right? This is on the 15 minute. And I wouldn't really feel comfortable going long if I were looking at this. And I can't remember if this is something that we actually said. I wouldn't feel comfortable going long unless I saw a standard deviation to the upside, which would have been this one here, or actually it probably wouldn't have been. But anyways, a break above previous day high to go long, because in this range, we are high in the range, and I don't want to take any kind of long here, because my rules say that if I have a defined range, I will not long in the premium part of the range. I will only long in the discounted part of the range. Okay, so this made it very easy for me to say, I'm not going to go long until I see more structure to the upside, the stair stepping on the 5 minute to the upside. So I hope that kind of answers your question. Yeah. Okay. Great. Nice. All right. Let's head back to the. Oh, it's a lot of drawings on there already. I don't want to get rid of all of them. This week, with the surprise news on Wednesday, like I think a lot of people don't even trade CPI or NFP, so it's like 2 trading days taken out right there, and I mean, I got chopped up a lot. I traded my cash account on 2 of the days, and I just terrible decision, but I was able to claw my way back to respectable losses. But I have this week has been very educational for me in terms of the importance of trading inside of the allotted window. Those screenshots I posted about the lunch range is another way for me to stay out of the market and tell myself, if I get into a trade before 130, I can expect price to be potentially disrespect what I'm looking at. It has, you might start to see price moving in a certain direction, but at 130 hits and then it wants to go take out one of those lunch ranges. So I suggest if you guys go onto the channel that I posted all those, the SMC primer page, you can take a look at sort of, all I do is mark out the 12 o'clock to 12:30 range, draw a box around it, and I wait. After 130, I wait for one end to get swept, and then I look for a reversal to the other side. So anyways, okay, let's get out of this, and let's go back to the daily on this side here. And then let's just chat about any other questions. If anybody else wants to go over a specific trade that they took, a particular day you wanted to go over, let me know. And if not, then I'll just kind of carry on with some of the things that I potentially saw. I think the standard deviations for me have been extremely helpful. And I'm starting to trust them a little bit more. So that's been really good. I think also the other thing, trusting the 4 hour. Friday was interesting because we had this moment in time where price retraced before it hit this 4 hour fair value gap, right? So I was looking at price at 10:30. This is why I follow the hourly too. Yeah, we can go over the standard deviations, but more specifically, like, are you talking about trading off of them, or are you talking about plotting them, Jamie? Both. Okay. So again, I just want to go over something really quick here. So let's go to the 15-minute. So I saw this day this is an ugly day. This is so disgusting. But I saw this rejection, and I think I saw Cooper short, and I was like, oh, it's going to come back up. Not that I can predict the market, but I am starting to use and have a little bit more weight into, like, okay, if we're trading really close to a 4 hour fair value gap, I want to see price go into it before I think about taking a short. And then, so this is where that lunch, I saw this lunch range again. So your box is drawn from 12 to 130. And here, if you're thinking, oh yeah, I see a price structure shift, I'm going to take a short off of this OB. I wait for the lunch range to form first, and you get one last tick sweep of that lunch, and then you get the move down, and then you can potentially take, a short out of here, or wait for this candle to close below here, and then a retracement, and then start to take even this down to 1.5 retraces, and you take the bottom of the lunch range. Right? So that's a continuation to the downside, and follow the standard deviation and trust it, and know that, okay, we don't necessarily need to go back up because we already did sweep that lunch range high. So that the 4 hours important to make sure you're navigating and watching. 4 hour fair value gap. And I know that a lot of the times too, I've been waiting to see price go through the fair value gap completely. And then I've been watching for trades at the top of the fair value gap. And I'm trying to remember where that happened before. Let's see, 4 hour raise. I guess it was kind of doing it a little bit there, but it doesn't always have to cut up through it, right? So I think this was a trade in the morning where it kind of touched the top of the fair value gap, traced down, and then moved higher. Anyways, okay, let's see if we can't figure something out on a standard deviation. Do this on hindsight here. Let's go back to, let's just run through each day here. Okay. Right, so this is the 6 to 10. Okay. So when I'm back testing, I'll go to my 4 hour and I'll go back to the 6 to 10 candle, or sometimes I'll go back to the 2 to 6, so that I have like the complete picture of the complete picture pre-market, right? So this is the 2 to 6 on the 4 hour. And then on the 1 hour, we're sitting at 6 o'clock, right? So on the hourly, that's 6. We're not usually trading at 6 in the morning. So let's just, I don't mind getting rid of the 15. And this is the 5. Okay, good. Okay, so on the 5 minute, we have this London standard deviation that hit the 2.5 already. Okay. So from there, we start thinking, okay, that could be met. We may not need to go down any lower. It would be nice because we have all of this, and we could be thinking that we want to go, lower here. And I'm pretty sure we ended up going higher on this day, but let's take a look and see how the price just kind of unfolds here. So this is our London standard deviation. So you see even here, right, you get this fast move down to 1.5, and it stops there, retraces to -1, and then continues down to, what we would be looking for the next play would be a close during like a time frame, like a specific time frame. So during the macros, right? So at the top of the hours, you'd be wanting to see price close below 2.5 and then continue to the 4. So let's keep moving. So we have this new standard deviation that printed. Okay, and we'd be waiting for it to get all the way to here to move higher, right? So we don't typically play it, But if we start seeing the stair stepping, this is very much similar to what we went through just previous to the downside, right? This is pre-market and it's stair stepping to the upside. So hey, if you feel comfortable and you see, okay, previous month low, fair value gaps, close above, right? You're getting this close above and then another close above here, and you can catch something pre-market before the volatility swings in, and you can potentially take profit prior to that and then maybe hold something if you're far enough away from price. But these are the two standard deviations that we're working with, right? And we had a sweep and then a swing low. And then here, the reason why this is drawn, and Jamie, I just want to make sure you know this, and maybe for everybody else that's listening, how we draw our standard deviations are based off of the 4-hour time frame, right? So we look at our core 4 has these dotted lines on them. So from 2 o'clock to 6 o'clock, that is the 4-hour candle from 2 to 6. So that's this candle here. So this candle here, this black one, is this range here. And so when you look inside of this range, you look for the high and then the low. And then once that hour is printed and price moves into the next hour, the indicator pops them on. So it takes the most previous swing high, took out liquidity, or it's just the swing high and then the swing low. So the 3 candle pattern that creates the swing low from before, and you go from high to low, and that prints your standard deviation. Okay. This one is huge. And like I was saying before, those big ones have been working out. So let's continue on here. So it's 8 o'clock right now. I don't think there's any news this day. Let me see. No, there's no news on the day. Yeah, okay. So then you see another move inside of this. Right, inside of this price here. So you've got a break above, a retracement down. But now we're getting pretty close to the open. Yeah, and then you see we have this price coming down. This is the daily open and the weekly open, this line here. So it tagged it and then it came back down. Now, has price just done this trader A, trader B situation? Well, we're pre-market, so who knows? I don't know if I'm comfortable. Maybe I'm comfortable taking a short off of there, thinking, okay, we're going to go to the downside from here. And Jamie, what we were talking about before, when you're looking at just these ranges, if I'm looking on a smaller time frame on the range, I can say to myself, okay, this is a swing high. And that's a session high. And that is the low. And I could say, if I want to just play this range and have confidence in this range, then I can take a short higher in this range. And once I see the tap off of there and a strong candle close lower, then maybe I'm thinking about taking a short off a London low. But again, I can't remember what happens at the open if we blast up or down. Oh yeah. Oof. Look at that. There we go. Well, hence why you don't want to be in a trade during the open, partialing out and putting your stops where they need to be, right? So now we have this, that upward standard deviation that was negated, right? However, we had a really strong reaction off of this low to go higher. So here we're sitting at 935 and we want to see price play out till 945, right? So here we go. And let's make sure this. Okay, that orb is on, right? So now, in my mind, I'm thinking long, just based on this structure, based on the fact that we closed above this high. Okay. We came back down. We tapped into a fair value gap. And now I think, I can't even remember what happened Monday, but now I'm just thinking we took out all of this. And I think we go for London high. That's just based off of what I'm looking at in price. Yeah. Okay. So very important to wait for the open. And once the open shows you that, like, oh, this closes below, and that's great if you're trading it. But once London hits and you see no close below major lows, real strong rejection, you can start thinking bullish. Then you can see that this 5-minute gap is created. And then you can look at the fact that, if we're looking at fair value gaps, great. If you want additional confluence, you can start looking at, a rejection off of this area of price that created that zigzag, right? And by zigzag, I mean, if you're going from here down to swing high, to swing low, up kinda this. Now you're getting a break above here, close above here. Now you're getting a close above here, right? And then now you're getting a close above here. So boom, 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 3 closes above major levels. And then you say, okay, I don't want to take a long after that massive move. I want to wait for a retracement. And where am I going to wait for my retracement? Sometimes this is, I think, in my opinion, this is where levels get me in a situation where I might be early, is that I think, oh, it's broken above this orb high, so I'm going to take that orb high long. And then I'm like, wait a second, that is high in the range. And I don't want to take a long just expecting this massive expansion. I do want to wait for a retracement. So where is it going to retrace to? Well, yeah, it could retrace all the way down to mid orb, but you have to find a spot to take your shot. So this is sort of how I kind of explain it in my mind. I'm like, okay, I don't necessarily want to take a look at the levels. And the other thing too, I don't know, maybe Derek was in here. Maybe for me, one thing is that I'm not necessarily taking my shots off of the level when it retraces, tests it. I'm actually waiting for a price to like maybe come back through it and then expand. Yeah, we're recording. So have a good day, Jamie. Feel better. So maybe I'm waiting for price to actually come down, find a PD array. I can take maybe a 1 or 2 micro position or a starter position and then see what happens. And then price starts to move. And then it goes above the area of interest that, makes sense to me that it's going to kind of go through. And then you get on a 5-minute, you get this very nice break above 4 a.m. and a break and retest. So maybe I'm using that instead of using the orb. Or maybe I'm just, as soon as it starts to move through it, I'm adding a position or I'm taking my position. So then we had this standard deviation. I believe this is the one that I was like, when it was created, before it was created, we were trying to find them. And then at the 10 o'clock, this was already created, but it hadn't hit the 1 yet. And then it did hit the 1. And I was like, oh man, these are these high standard deviations that I don't really believe in. When I look at them sometimes, I'm like, well, that's really far away. So I can't remember exactly what ends up happening. We end up getting the 2. So, and then the 2.5. And then what time is it here? It's noon. How does the rest of the day play out? So we get this lunch range form. We get the sweep of the lunch range, and what happens? We almost get to it, but not quite. So again, these lunch ranges, if you're able to find a position where you're sweeping it and you take a short from it, you can look for 50% as a take profit, and then the other side of the range to take profit, to complete it. And then sometimes it doesn't complete it. Sometimes it doesn't go all the way back down to the other end of the range. So, but that's an example of that standard deviation coming out. And that was just really based on the 5 minute. We were to go back here and look at the hourly candles. Here would be another reason why I think at this point in time, right? Here's 10 o'clock. The 10 o'clock candle is printed. That 10 o'clock candle is this one here. Well, we've gotten all these rejections off of here. Even though we were still inside, this would be the tough part about sort of navigating the hourly candle, is that you would have this fair value gap and you would have had 9 to 10 o'clock happening right here. And then what you'd have here is that you'd have right here. What you'd have is indecisiveness. You'd have a sweep of the low, a sweep of the high, and a close inside the range. No close above this 4 hour fair value gap. So you're like, maybe price doesn't want to take all that out. Maybe it wants to come back down into this. So that would be a very hard thing if you're only watching the hourly candle closes. So the 5 minute would guide me. The 5 minute standard deviation would guide me. And what I could say is that, okay, I'm undecided here, and I don't want to take my shot here because I'm waiting for this hourly candle to close, and I want it to close and close out this fair value gap. So I wait. And then as you're waiting and watching price unfold, you see a tiny little bit of a retracement, but then you get a candle close above. This is now giving you extra confirmation that we're going to continue higher. Okay. So this 10:05 candle closes above the previous high. We make a new high, comes up, and I'm waiting for a retracement. Where's my retracement going to be? Well, I can take this fair value gap, and I can tell myself this down close candle, I draw my boxes around these down close candles. If the wicks are tight, then I'll include the wick. But what you have is a tap back into a fair value gap and the order block, if we're going to call this the order block. And that's enough for me. I don't wait for 50%. It either is a retracement into an imbalance and the order block. And if there's no imbalance, I wait for 50%. Right. So a lot of people may have been waiting for this, the orb high. But the second, I'll do it in the first fair value gap and try to take my shot. And then the other play here for additional expansion is, even after this candle prints, whenever price is coming out of a fair value gap, but you miss that, you can watch for this next candle to print. And if it's a nice strong candle, you can take a shot on a long there. It would just be a higher risk, or you might want to wait for a little bit of a retracement to go higher. So that would be maybe another example of maybe a trade opportunity. So, okay. What else we got? Any other questions that anybody has? You can ask away. I'm trying to look back in my notes to see. There were a lot of lessons from this past week. Just in regards to price action. Let's go back to the daily for the 4 hour. I do remember on this day here, so on the beginning of the week. Oh, go ahead. I don't know if someone wanted to speak. Oh, Christian, do you have a question? Christian, if you can hear me, your mic's on. So no, okay, no worries. So this was an interesting day as we started to stall and not take out this high. It was on Monday or maybe Tuesday. No, it was on Monday where I was looking at the higher time frame price action and saying, okay, these are going to be one of our targets. This too, you guys, is another really great tool to use when you have a major low, major high. It happened here. This is a good example. You have price come down here and then come back up. This was during Asia, and it moved down from this. Okay. Then it came down and then came back all the way up again and did it again. Right. So that's a level to watch. Right? It didn't happen here. Blasted right through it. Which is why we just don't take a random short. You watch for price to build. And trying to see what else may have happened. Well, this is another great one too. You could have taken this low, drawn it across. You get this candle close above or close below, comes back up, taps it, and then starts to march lower. It doesn't retest it again. So that was 2 p.m., 6 p.m., 10, 2 to 6, and then we get a fall from there. So these are good signatures to watch. So if price doesn't want to come back up here, then we can say, okay, yeah, it's struggling to kind of get through this order block. A lot of chop, but then we get the move. And if you were like, oh, I'm going to wait, and you waited and you missed this move, and then this happens from 10 to 6, and you end up catching 182 points, right? If you're playing the higher time frame structure, you could have caught a short from there. So tap inside a fair value gap. So it's whenever there's like a fair value gap created through the higher low, that gives it a little bit more probability. So we were at the beginning of the week, and I was just going to say, like, I want to see price get through this order block, close above and go, or get through this here. Right. And that's on a higher time frame, and we don't really trade higher time frame swing trades, right? But this was like a bias thing. I want price to kind of get through this, and then I can say, okay, I'm going to continue to be bearish. So if I can get a break and retest to go lower, or I can get a retracement to go lower, or if I can catch the trade to just think about how many times people may have tried to catch a long to go up to here to hit that target. It was all week. It's consolidated. And then we had this crazy NFP. This would have been a really great day to skip. Most ICT traders just don't even trade those FP and CPI days. So, yeah, okay. It's been an hour. I don't mind going another half an hour if you guys have any specific questions. Otherwise, I can just kind of continue rambling. Just clean this up. Yeah, one thing that's been really helping me recently determine my bias has been it has been the orb, but it has been the 9:30 open. Let's see, maybe it's in here. This blue line is my 9:30 open. And then the orange is the mid orb, and then orb high, orb high, orb low. So I think this was the day maybe we were talking about. No, this is Wednesday. So when I have 9:30 printed, it helps me kind of creating my bias or where I should be considering shorts and longs. So, and then this is VWAP, and I have VWAP on here because, again, I like to have something that's going to guide me for a little bit of extra confidence. Because I know that if we're trading near it, we might bounce off of it one way or the other. And I know that if we're trading away from it, we might want to trade, price might want to come back to it and then make a move, right? So if I'm adding all these together and I'm telling myself, okay, we are bearish. We had all this, these levels, this low resistance liquidity built up. Here we did take out, this is from Wednesday, so that was that NFP day, right? 8:30. So we had this nice stair step, and I was saying during this, the weird thing about this candle was that we didn't get this big wick or manipulation, and we like to trade back to 8:30 on news days. This was like a nice stair step. There was no manipulation from the news, and it just pushed. So I'm expecting a lower price just based off of that and how far away from VWAP we are. The price kind of likes to trade back to it. So I have been using 9:30. If I want to go higher, then I want during the open, I want price to start navigating higher. And then you see that obviously the mid orb held us down. And even if you missed a short from 9:30 or from a PD array from here, like this, again, if we're just call them order blocks, but call them points of interest. But just this alone, breaking below, retracing into here, fair value gap. This is on the 5-minute fair value gap, taps into it, stays below 9:30. We're not getting a close above 9:30. We're not getting a close above mid orb, and then price down moves down. Oh darn it, we missed the price, or we missed the move. Well, you have this that we closed above, so this would be your mitigation block. We could use it as a breaker, actually. This would be the breaker because we're coming from down and then we curl. It's not a very clean one, but it's a point of interest. And lined up with orb low in VWAP as well. And we've hit the 1 and 1.5 of a standard deviation. So then we take this trade down. So another really good example of sort of just like what I've been using 930 as sort of a guide. And if I go back in time here, this was a little messy. This was Tuesday, right? So on Tuesday, we took out London high, and then we took out London low, and then we came up and didn't quite take out that, and then we took out Asia low, and then we came up and we took out the previous swing high. So this was crazy, right? But if you're trying to catch a trade, you would have got, if you're trying to say, oh, a continuation lower, I'm going to take a short from it, or no, that didn't work out for you. Well, we're trading below 930. So aren't we bearish? Well, oh geez, it's very messy. Today would have been a very tough day to trade. And so you get a fair value gap on a 5-minute created to the downside, and then you get it inverted. So then you're thinking to the upside. And so if you broke that and wanted to go for a retracement higher, I wouldn't know what to do. I can't even remember what happened on Tuesday. So, and I don't have my trades recorded. So, but as we get through the day, we're starting to get sort of now work our way through and trading now below 930 and below VWAP, and we get below mid orb, and then it comes back up. And so Tuesday was a mess. So if you were in here and you were able to get some profits, great. If you took a couple losses, then today should have been like, okay, I'm done. Or you take one trade and then you trade in the afternoon. And then once you trade in the afternoon, let's just watch and see what happens with this if we get a continuation with the lunch range. Because if we did trade here and it didn't go very well for you, and then you waited till 1:30 and you marked out your range, this move down gives me, it's a little bit difficult because I don't see a fair value gap until like here, this mid orb. It would be a little bit difficult. Maybe you do a break and retest a mid orb there, but I think this was like a continuation to the downside. I can't remember. See, so now in my mind, on a 5-minute, I would be saying, well, I'm going to go long here. So in the 5-minute, I get a candle close above. So I would be taking a long from out here, but I'm pretty sure that doesn't work out. I think it keeps on going lower. Yeah. So really tough day to sort of gauge. But you do get, if we do look at it, you do get a sweep of that low. And even though the 5-minute structure did shift, it didn't shift with much displacement. So this I would have chalked up to like a 2 to 3 loss if I were to take a loss in the morning to see this. And then this is what I don't like to see. I don't like to see like this massive move down, because I think, oh, it maybe needs to reprice and go back up. So anyways, not sure if you really learned anything from that example. But yeah, there's another good example here. So this was last Friday, and we ended up leaving Asia high and Asia low, and I think it's because we did come from this massive move down, and then we had this move to the upside. And sometimes at the open we're thinking, oh yeah, we're going to go and take out one of these lows. But if I use the orb and I use my 930 open as a guide, I can tell myself, I remember this. I remember saying right at this moment, oh, we're trading near 930. I want to see us trade lower. And then we get this move up. So this. I think Thomas took this mid-orb trade. And then, we're just kind of stair-stepping, even though we didn't break above all this over here. You did have resistance here. And then you had this nice strong move this way. So trading above 930 kept me bullish. And yeah. All right. If you guys don't have any other questions, I think we might call it here. And feel free to send me any direct messages if you guys have any questions throughout the week.